who's going to cover the cost if an entire community burnt down?
Welcome to the Opposites Unite podcast,
where we discuss real estate and lifestyle topics,
break barriers,
build connections,
and find common ground.
Let's unite.
The whole community burns to the ground, right? Like maybe 100 homes in a community. And people have a loan on that, like Bank of America or Chase or something, or they paid cash for it, and the whole thing burns down, and the HOA doesn't have enough money in there to build it back up. They're all out, just their money, flat out loss. There's no insurance.
Yeah, I know. Because if your house burns down, you still owe the bank for your property.
Right. Yeah, and okay, so what does that look like? That's a mess. And that's the catastrophe that we find ourselves in today, because lenders are not going to lend in that environment. They're not going to originate new loans. Yeah. Now they find if they originated the loan 5 years ago, they're going to be able to do. They're forced to be there, right?
That's what insurance is for.
But what if they don't have it, and the HOA doesn't have it because they don't want to raise your rates? That's a ridiculous scenario to be involved in, but it's what's in reality today, because they don't want to raise the cost to the homeowner, so they're not, and then they're saving the money in the insurance by not buying enough. That's what that looks like.
Right. Yeah. Well, insurance, HOA, earthquake insurance, like
it's all getting ridiculous.
It's all under the same umbrella.
Yeah, and the fact that insurance is making such a huge, or what we're seeing a lot is when we're getting into transactions, the first thing we're telling our clients is get a quote for insurance, because sometimes depending on where it's at, especially with high fire areas, the insurance can get really expensive.
Well, especially if they have to go with a California Fair Plan, which is a government insurance plan to cover the areas that the other carriers aren't covering, right?
And California Fair Plan doesn't cover everything like a regular traditional insurance does.
It's just the structure. You have to get a separate policy for the interior contents.
Yeah, so and then if you do, then that adds even more to the insurance. And what I have seen happen is that people don't build that into their financial limitations, and then if they are buying at their basically stretching their budget to the tip top, it would throw it to where they don't even qualify. Right?
Absolutely, because it's factored into their DTI.
So if the insurance is so crazy, okay, so let's talk about HOAs and how that's impacting them.
Well, right, because if in a homeowners association, they have to have a master insurance policy.
Right.
Okay. So I know for our community that we live in, I think I heard that the policy for the previous year was like $144,000 per year. And this number sounds big because it's for a homeowners association master policy, right?
Right.
But this year, our homeowners insurance fees have gone up. Actually, they doubled.
Yeah, that means insurance costs doubled.
Yeah. So, and in actuality, it did. So I had heard that it went from 144 last year to 270 this year.
Ouch.
I know, right? And we just got like another notification. I don't think I even told you the other day, something about the earthquake policy for the master association. So I'm so scared that this is going to just keep going up and up.
Where does it stop, right?
Yeah. And I had a client of ours call me, I don't know, it was a couple months back, and she was really concerned, and she said, how can they do this? Like, do I have to pay this? And unfortunately, you do. Like, you sign those CC&Rs when you buy a home, and you're stuck. They can actually lien your home if you don't pay your association dues.
Well, what I'm thinking is, if you're think about it, you're an HOA, right? And if you don't cover, because you don't want to raise people's rates, right? You want to be the good guy and save the homeowners money. So you don't approach them for an increase in rate, and then you can't buy enough insurance. Now you wind up with a problem that we're seeing today, which is that the lenders are not lending in those communities that don't have enough coverage. Because if you're a lender, you're exposing your money, right? I mean, God forgive, the whole uh, complex goes down. What are you dealing with, right?
Yeah, so they've got to have the coverage. So this is a no-win situation, but something's got to give somewhere. The state's got to step in and help because people can't afford things anymore with the at the rate that this is going, it's just not good. It's not good. You know, that client of ours that called a couple months back, she says, "How can they do this?" She said, when I bought this condo, it's a little condo. I think the HOA was around 370. Within about a month and a half of her purchasing it, it went up to 450.
Dang.
Um, not few months, maybe within the year after that, it went to 750. The reason she was calling me was because it had just recently gone up to 1200. This is, I'm telling you, when she bought it, like a $400,000 condo. Can you imagine having a $1,200 homeowner association?
Wow. Yeah, that's ridiculous.
And then what do you do? You know, she said, "What do I do? Am I stuck paying this?" And unfortunately, she
She is.
is. I said, "Your only option is to sell." And she said, "Well, who's going to buy this place? Who's going to buy this condo with such a high homeowners association?"
I don't know.
It's a
So,
problem.
well, it creates an issue, right? And that's where the other people, and then if they don't raise it like that, and you come in, and people have to come in and buy, unless they're paying cash, right? They're going to have to deal with the lender now not funding their loan because they don't have enough HOA insurance.
Yeah.
So, and then so now you're stuck both ways, right? Where do you resolve that? It's kind of a a tough situation. I mean, and that's not even the owner side of the insurance because they have to get more insurance to cover their interior, like their contents.
Yeah.
If
Well,
something happens to it, you're on your own.
what caused all of this to happen and to go up? Was it the California wildfires? I mean,
Yes.
I know that affected the insurance carriers quite a bit, but was it just that?
Well, it was that. It was also the cost of materials, cost of labor have all gone up in construction. So if it does burn down and you have to build it back up, it's not the same cost to build it up today
Yeah.
as it was just even pre-COVID, right? Things
Yeah.
are probably double.
Makes sense.
So that's going to be another reality. Generalized inflation of everything is gone up. So
It's insane.
today's dollar is not what is worth half of what it was just
Groceries is like
right, we know
through
that.
the
Yeah,
roof.
don't go there. That's a whole nother topic, right? But yeah, so that's what we're dealing with is a lot of that and how it's trickling down into real estate and how it's affecting the HOA market, which means newer communities that have homeowners associations that are intended to protect the quality of the
Yeah.
neighborhood
Yeah.
and keep your neighbor from
Painting their house pink.
yeah,
Yep.
something crazy like that, right? And just
Yeah.
putting keeping cars on the lawn.
Yeah.
So yeah, and then now it's kind of backfiring into some crazy thing that's
Yeah.
making costs insane. But it's still making it even in the generalized area, like just in single family residences, which are like detached homes, they're still seeing a very similar thing because they're just seeing it straight up in their cost.
I mean, people are not going to want to live in communities with associations, and out here in Santa Clarita, that's the majority of our communities, I think. At least, the newer stuff is anyway.
Yeah.
I don't know about you, but I personally prefer to live in an association
Oh yeah.
because, then the integrity of the community stays intact.
There isn't much out there without one that is in a um yeah, in a preferable community, right? So like that's the reality. And then you with these costs going up, it's just making it all more expensive. But it also makes it more enticing to live outside of an HOA, maybe.
That is true.
And the secondary thing is how exposed to the fires is it, right? If is it rural? Like is it out in the country? Because forget it, then your rates go crazy, especially if you have a nice house you have to
Well,
rebuild.
here's the thing. I mean, we don't live in a rural community, and we sold one of our clients a home. It's around the corner from us, and they had to get a California fair plan. I don't understand that at all.
We don't live in exactly the the mid city either, though. I mean, we saw raccoons on the cameras this morning. That was a little crazy.
That's
But they're
interesting.
common. They're common now, and we've seen bobcats and other animals in our community. So, I mean, the reality is if you have that, then you have brush where they're hiding, and there's places that can burn. So,
Yeah, but I mean, I wouldn't consider us in a rural neighborhood, and
no,
I
not at
wouldn't
all.
expect that we would be considered a high fire zone and have to go through a California fair plan. The other thing is that for somebody who's buying a home and that home has to go through a fair plan policy, those take like 3-4 weeks to put in place. I mean, that's something you've got to handle that like immediately when you get into escrow.
Up front, yeah. Or else it creates delays, right? And delays create cost and possibly even losing your dream home
Yeah.
because you waited too long, and now the owner's either frustrated or sometimes people do crazy things and just cancel things
Well, yeah.
just
I
because they
mean,
have the right to, right?
and if you're financing, you have to have insurance in place in order to close. Lender
Yeah.
won't close.
I mean, it can be a nightmare situation in any way, right? Like if you live in a community that's underinsured and like I said, something happens to the whole community, people, lenders are out, homeowners that are cash, that own outright are out money. They're just out money. And it's a major catastrophic loss that you generally use insurance to help mitigate, right?
Yeah.
But if you can't or don't, that's always a
Yeah.
subjective
So
thing,
what's
right?
the solution?
That's the question of the, I guess, decade. Like that's really where we're at today, and um, a huge problem and huge thing that legislators have to work on. Really, I mean that's what it is, right? Because the fair plan is essentially the government's answer. But one thing I was discussing with, and we were discussing with she was a judge, right? And she was telling us that the California fair plan is subsidized by these big, and I'm not going to name names, but these big companies that have a percentage of the market share we're in California. So if you have a huge market share, right, then you're going to have to supply or subsidize the fair plan more because you're covering more of you're basically getting more of the fruit from the state. So their answer is to reduce their percentage. And a lot of them are pulling out. And now big names, Farmers, State Farm, they're
All
just
state.
they're just not writing in California anymore.
Yeah.
How are you turning away business when business is so ridiculously expensive already? So there has to be, when we're talking about the cost of everything going up, I guess there may not be as much profit in it, but maybe with the subsidized, because most people, I shouldn't say most, but I don't know what the percentages of people that are going to fair plan, but there's more than before.
A lot more
Yeah,
than before. It used to be, I would say in the past, something we rarely experienced in an escrow with a buyer.
right. It was
Rarely,
a total backup plan.
rarely, yeah. Oh, the big time backup plan. They rarely ever had to go fair plan. And now it's like a lot of them. I
It's
would say more than 50%.
right. So that's a huge increase. And
Yeah.
now if the big companies are having to pay for that increase while they're losing market share, they might as well just do what they're doing.
Yeah.
Maybe it might be a squeeze play for them to actually put pressure on the legislation and for essentially the government to do some type of a fix. I don't know. That's another
I don't know.
that's
We'll
another
see.
podcast,
We'll
right?
see.
But
Right.
like, yeah. But that's what we're dealing with. We're dealing
Yeah.
with these realities in today, and um, we're in California, so
Yeah. I
where
know.
people are leaving like crazy. That's what you hear, that everybody's leaving the state,
Yeah.
and you see the stats. They are a lot of people are leaving for these reasons. There's high costs. It's just
Very
expensive.
true. I just want to throw out there that if any of our listeners have any suggestions or solutions to this, maybe they can DM us and
Or write it in the comments.
yeah,
Yeah,
write it in the
we'll
comments.
answer and we'll like put some more or provide some suggestions or something that we're not seeing or something. That's always good. I mean, we want
Yeah.
to provide information for people that we're seeing, right? We're in the trenches taking grenades,
Yeah.
right? So,
Every day.
uh, yeah. So if anybody else is in there, we're always welcome
Yeah,
to some information.
for sure.
We appreciate that. We want to make more of these videos with more content and information that would help everybody
Yeah, absolutely.
get in the know, right?
All right. Thank you. Thanks for tuning in to the Opposites Unite podcast. If you've enjoyed today's episode, please like, share, and subscribe to our channel. Don't forget to leave a comment for a chance to get a shout out in our next video. See you next time.